Hi, and welcome back. This week I'm going to be talking about different changes in my portfolio and some of the earnings calls that are upcoming that I'm anticipating and looking at the most. The biggest one being Coca-Cola. So as you can see, today was a pretty rough day. The stock market was down, but the biggest struggle for me is that Bitcoin got hit pretty rough again. So as you can see on the day, down $23, down 4 on the past week. I was trending upward and then slid downward again. So as you can see, still down on the last month, not looking great. And then we'll go to all time. As for the load, I had that upward trend, and as we can see, it's sliding down again. So I made a couple moves this past week. I put another $100 in. So all time, I'm looking at an investment about $2,700. So $2,563 right now, not good, but not horrible. I think that in the long term, this will pay off, and I've got a portfolio that's starting to pay dividends more consistently and more highly. So one new stock that I did purchase is right here, GLW, otherwise known as Corning. If you're not aware, they make glass screens for computers, smartphones, all sorts of stuff like that. Gorilla Glass, I guess, is their biggest product. So I'm up almost $1 on that, or 3% in the past couple days. So that's a big plus right there. But the reason I'm excited for them is, as you can see, over the last month, they're doing well. If we go 5 years, they're kind of up and down. As you can see, they trended upward. Now they're kind of stuck in this stagnant mode right here. But a big reason that I'm looking at them is that they have products that are consistently being used. They have a lot of cash flow, and they're paying a dividend right now. So hopefully I'll see that first dividend in December. Again, not much, but as I'm growing my portfolio, I think that's going to be a really good addition for me. So if we go down and look, Robinhood has them at a 46% buy rating and 54% hold rating. So not the highest buy rating, but not a stock that you want to really avoid. Now, of course, I bought another share of SPHD, which I'm trying to buy every week now. This is my S&P 500 ETF. So this is paying a monthly dividend, which means, again, at the end of this month, I'll start seeing more money as I've continuously invested every week. So this basically tracks the S&P 500 every single day, and it's moving at just about the same rate. So as you can see, not great in the last month or even in the last 3 months, but that's pretty much mirrored the stock market over that time. Over the last 5 years, it's been a little bit stagnant. So this is moving a little bit slower than the S&P 500 as a whole. I think part of this is that it does pay a pretty high dividend. Right now, I want to say it's at about 6%, the dividend yield, but I'm going to continue to buy this stock because I think it's something that is going to be vital for a healthy portfolio in the long run. Now, another one that's taken a big hit is Vivint Solar. So I was up really big there for a while on Vivint, but in the past couple weeks and really the past month, it's taken a nosedive of sorts. So as you can see, down $13 on the day, down 10 all time. So it's bouncing up and down. But over the last month, we can see that it's in this downward trend, or even in the last 3 months, we can see that it's in that downward trend. But when we look at the last year, we were in this big upward trend, and that's where I got lucky, is I started really buying heavy here, and it had peaked almost at $10 there. Let's see, $9.45. And it is trending downward, and most of that had to do with their last earnings call, where they had said that they'd refinanced some debt, taken on some more. But everything that I've read says that this stock should perform well in the long run. The leasing model that they have means that they're consistently gaining money, that they are consistently increasing their revenue. The problem is they're not making money at the moment. So Robinhood has them at 100% buy rating, so I think that's another thing to look out for. But this is the problem. They have not met their earnings expectations whatsoever. And they've been very consistently losing money. So this next earning call is coming up on November the 5th, and I think that is going to be a big test to see exactly how they're doing, both right now and for the future of the company. So that's definitely one to look out for. Now, here's an interesting article that I have pulled up about that Coca-Cola earnings call that's coming up later this week. It's coming up on Friday. And this article basically talks about how investors and experts have been wrong about Coca-Cola in the last year. And I've talked about in the past, the reason that Coca-Cola is a big sell for a lot of people is that basically they are a dividend king. I've talked about this extensively. They have very high dividends and they continue to raise it. But people don't necessarily think that their business model is going to continue to succeed. both in the US and globally. Soft drink sales, specifically soda, are down as people are realizing that it's not the most healthy thing in the world. But as they have diversified their portfolio, bought bottled water companies, lemonade companies, iced tea companies, all sorts of stuff like that, they have continued to basically outpace expectations. So right here, they talk about how Coca-Cola has gained 20% in the last year, which kind of took a lot of people by surprise. And they're expecting, experts are expecting a 15% increase in year-over-year revenues, which is huge for Coca-Cola. And so right now, their bottom line is 56 cents EPS, earnings per share. But that would be a slight decrease from the third quarter of last year with the revenue increasing. The interesting thing of note right here is that the earnings predicted have beaten expectations each of the last 4 quarters. That's huge because it's showing that despite people's expectations that maybe they're not going to perform as well as they have in the past, they've blown those expectations away. And here they talk about how the share prices have done well, but that's not entirely reflected by the increased earnings. There's a lot of things to look for, and as we're looking at this company as more of a long-term investment, those things can change pretty rapidly. And I think that's really the big takeaway from this, is that while this upcoming earnings call is important, it's not an end-all be-all for the company, and I am hoping and planning on basically sitting on my Coca-Cola stocks for as long as possible. Now, the one last thing I did want to talk about in terms of my stocks and my positions is Bitcoin. I talk about it pretty much every week because I think that in the future, as that Bitcoin halving is coming up, this is going to be a more integral part of my portfolio. So clearly down $115 is not good at all. That's very clear. But it hasn't performed as poorly since that big dip in the last month. So here we saw a downward trend and a real nosedive right there. It hasn't, I wouldn't say stayed stagnant since then, but it hasn't decreased nearly as much as it had in the past. So even when we look in the past year, clearly they're up a ton, but when they were down here at $2,000-$3,000, people didn't think there was any reason really to invest in Bitcoin at the moment. I did read somewhere that Bitcoin, as of I think just about a month ago, was still the highest performing asset of 2019 because it was down here at around 3,000-4,000, and it's basically doubled since then, which is amazing. And again, the outlook for me is that as that halving is coming up, I think there's a lot of upside, and I think that in the long run that should be a huge moneymaker. But I've kind of decreased the amount of money that I'm putting towards Bitcoin because it is so risky, especially as my portfolio is growing. So thank you, and I'll be back next week.